Hello and welcome and welcome and hello, turds. It is Danny Deals coming at you with another exciting, action-packed episode of Poco Moss. Boy, we have a lot to cover today. We have new analyst ratings out. We have some pretty interesting price action. We have some very interesting options activity. I don't want to dwell too much on this senior convertible note deal, other than to say if the powers that be, if the brain trusts on YouTube, not just the future investing guys, Uncle Bruce, but sorry guys, I was commenting back to some of you. I have accidentally left my YouTube open. I was trying to return comments to some of you guys on the pre-show, but guys, I have written some notes out. There's a lot of stuff going on, so I just want to get right into it. I'd like to thank, of course, number one is Princess J, just for putting up with me and what it takes to make this broadcast. I have dozens of staffers here in the house, and it's not easy, guys. I'm not easy to live with on the best of days. Let me tell you. I also like to thank Not a Lurker for producing the show today. Guys, I wrote out my notes on the Home Concepts magazine here, so I don't know. We'll see how it goes, but I would like to share my screen with you guys, and we'll go ahead and get started. Here we go, guys. The SoFi stock, ticker symbol SOFI, SoFi Technologies Incorporated. It's 3/12/2024, Topper time check. It's 5:07 in the PM. That's 7 minutes past the top of the hour, 23 minutes to the bottom of the hour. Hope it's a great day. Wherever you are, again, it's Danny Deals. It's Poco Moss, the show where we give you just a little bit more. The SoFi stock today down 20 cents or 2.6%, even after hours. We're talking 48 million shares traded, which has been somewhat low considering the volume of late. Let's see. Anything else interesting on this page? Not really. Kind of the same old stuff. All the claptrap from is SoFi a millionaire maker from Motley Fool? SoFi's capital raise could help convert bears into bulls. Seemingly not so far. Taking a look at the chart, guys, just what's going on. We had this support line that sort of held 3-4 times, acted as resistance, but the stock hasn't really broken down below that since the end of November, when you saw this giant green candle come through on December 1st. I think you guys remember that. And then you saw another giant green candle come through there. Full round trip, pump and dump. We saw this upward movement that looked really good in the stock, but then this giant gap down. So obviously the bears and the shorts weren't done with us yet. But the fact is, guys, the support still hasn't broken down. I don't think this proves anything, and I think this has basically been a tremendous amount of shorting. So as far as the price action, there's not really that much interesting here. This short sort of bearish algo is holding the stock at around 750. It kind of obviously broke down to 750 on 3.5, pushed up for 3 days, reversed back down. This is very typical of SoFi. It often goes up and reverses in 4 days, 5 days, 6 days. It doesn't get on long, steady trends. That's just not how these algorithms are programmed. So what's it going to do next? It's very hard to say. The market makers are still in control of this stock. What's encouraging is the float is getting smaller day by day. It's not just ARK taking millions of shares off the table, but it's this convertible note deal. And if Uncle Bruce and others that I've listened to are right, which I'm pretty confident that they are, there's going to be 100 and some million, could be close to 200 million shares essentially taken out of circulation, which will, that's 20% of all the shares issued. It could be that high, but 20% of the free float certainly. And then ARK is just a fund that reports their transactions every single day. That doesn't mean they're the only fund buying. We're going to have to wait perhaps months to see those other filings. But guys, I always like to show you guys the short interest because I know you guys like to see that. If you come through and take a look, the short volume, the aggregate short volume ratio was, again, 72.5%. Was in the 60s yesterday, back to the 50s And then the 2 days before that, 68 and 76, 74. So, guys, 5 out of the last, or what is that? 4 out of the last 6 trading days, the aggregate short volume ratio has been in the 70s. And I have never seen SoFi in the 70s. Put call ratio looks very, very bearish for this Friday. It's 1-to-1. You again never see that. So there's some very unusual things going on with the SoFi stock. Now, when you see Ortex, be very careful, guys, because the short interest has been way behind. What we've seen the last 2 updates are these really dramatic jumps. Yeah, which was, February 9, and then, which was the next report on February 27. These things don't hit exactly to the 2-week line, but we keep seeing shares on loan go way, way up. We see this huge borrowing ratios. We see this huge daily borrowing. Remember the other day they borrowed, when all those shares were traded a few days ago, they borrowed 30 million shares net. The next day they borrowed 15 million shares net. Look at shares on loan spiking, guys. When those official numbers come out, the short interest of free float, they already have at 18.24%. But this is tens of millions behind. I think short interest right now is at least 21% of the free float, at least. And if you look at the live short interest today, guys, the borrowed change net, 11.54 million shares. And look at the shares available, guys. This is always 10 million. Okay, always. Now you see in this graph here, you see the shares available all of a sudden plummet on the 8th of March. And now they're cruising along. It's been as low as, almost down to 1 million shares available. You never, ever see that on SoFi. And the cost to borrow average is 1.4%, which is over double where it normally is. I know this isn't that dramatic yet, guys, but if a couple 100 million shares are being pulled out of the float effectively by the senior note deal, people like Cathie Wood are buying 1 million, 2 million shares per day. Shorts are borrowing, anywhere from 8 to 15 million shares. Something has to break. I mean, the quarter is over in 2 weeks. And so far, SoFi is not showing the type of weakness that would warrant this type of short activity. I just can't see it. I can see why they shorted Affirm. I can see why they shorted Carvana. I can see why they shorted GameStop. I don't know why they picked SoFi other than some personal animosity, some belief in the fact that student loans was a weak business, but that's all shifted. Just doesn't make a tremendous amount of sense to me, but everyone always says, hey, SoFi can't short squeeze. There's just too many shares. There's billions of shares. I mean, yes and no. There's still a lot of SoFi shares floating around out there, but I think not a lot of retail investors are prepared to sell their SoFi shares down in the 7s. I think a lot of us have been forged in fire. We've been down into the 5s. We've been down in the 4s. We've held our shares. We've added, and we're just not fazed by this activity. We're just not scared by it. It's not an issue. Hello and welcome, guys. Welcome and hello. Thank you for joining me on Poco, Moss. Let me move myself down to the corner and give you guys a little bit bigger screen here. I kind of forget what's going on. It's a new production thing. I've got my monitor over here, guys. But that's the short interest. I mean, suffice it to say they're shorting the snot out of the stock. And a lot of smart Alex who, probably know more than me about the mechanics of this aggregate short volume ratio and these exchanges, they're like, well, this part of this is order flow, how orders are processed. It creates short volume. And I said, okay, fair enough. But why is this number sometimes in the 30s and the stock is going up? And then when the number is even in the 60s, the stock is going sharply down. Then it's in the 70s. And the best they can do is kind of hold it sideways. I mean, most other stocks, if you saw it was being shorted this much on a day, is because there would be some kind of fundamental weakness and the stock would crash. The stock would be crashing. They'd be shorting it down. Right now, they're shorting into strength. That's what's so dumb about this. That's what's so unusual. You don't short this hard into strength. It's suicidal. It's a kamikaze mission. I don't get it. You're just crashing your plane into a mountain, though, not an enemy aircraft carrier. In any case, guys, hello and welcome and hello. Hope everybody's doing quite well this fine Tuesday. It's un poco mas, guys. It's Danny Deals. Thank you for tuning in. Welcome and hello and welcome. Um, Guys, how's everybody doing? Benji, Flint Creek, M. Russo, Berto, Lee. Wish I could say a welcome and hello to everybody. Hawaii Kingpin, Columbia Kingpin. Hello and welcome, guys. I don't want to make these videos, overly long and horrible. But I just want to try to tell you guys a little bit about what's going on here. Um, got a, I've got a live studio audience for the first time. I don't know what I did with my childish noisemakers, or I would have done the applause function. But in any case, guys, there's just some interesting articles out, and there's a couple things, that are just so suspect, guys. It's suspect. You're suspect, like Ben Affleck told the interview people in Goodwill Hunting. So Ortex Borrowing predicts a massive increase in the short interest. I'd say it could go up to like 22% overnight. So essentially, guys, another thing I wanted to talk about was ARK, what ARK buying represents. It's not just 2 million shares here. It's not just 2 million shares there. It's not that they now own, like $100 million worth of the SoFi stock. They're one of the largest shareholders. It's what does ARK represent? I'm not saying Cathie Wood is always perfect. I'm not saying all of her ideas hold water. I'm not saying they all pan out. If you were in, Teladoc, if you were in some of those companies, Roku even, you've been hit very, very hard. But the point is, what she's trying to find is cutting-edge disruptors that are harnessing new cutting-edge technology. So why would they be buying SoFi so heavily? I know she knows Nodo well. I know they've been, colleagues and have known each other for many decades. But the point is, she's not going to buy SoFi just to get, net interest income. She's not interested in that. She's interested in sort of this exponential growth curve, and I think she sees something in SoFi. And I also think, not that she's an insider, but when you're very close to someone sort of there, I'm not saying Nodo is giving Cathie Wood any type of insider information, but if you saw there, of course he wouldn't. I mean, Nodo is completely above reproach, as are all SoFi executives and management. But my thing is, when he does that interview with her and she comes away with that, and then within just days and weeks she's just buying the hell out of the stock, what does that tell you about the impression of SoFi being valued as a bank, not as a growth stock? That's the thing with this Gary guy, G squared, my bullum-headed buddy, my tumbleweed, my wandering rose, my retired analyst. What is this guy talking about? He came out with another hit piece on SoFi that I think was even less well-reasoned and lazier than the last piece. And the guy's very smart. He's better than this, but I think he's just pumping out copy to maybe he's buying like a diesel pusher motorhome or something. Maybe he wants to drive around and see all 50 states, and he's funding that by writing these lazy articles on Seeking Alpha. I don't know. Anything's possible, but I usually, even the articles, even the authors that I disagree with on Seeking Alpha, I can usually sort of follow their arguments and, because I think they're usually a little bit more vetted than some of the other sites. But, boy, this guy, it's a doozy. But anyway, so what is Max Payne, guys? Max Payne, last time I looked, was $8. You got the puts coming in, obviously a lot more volume on calls. This is showing, but the put call volume coming in now is actually even. Calls, what do you got? You're out at, you're heavy at 750 and 8, puts 750. So obviously they're trying to hold 750, but there's several more days left in the week. Max Payne, if you look on a cash base, is actually closer to 8 than it is to 7, which I think we could say, but it's not 7, it's not 8, it's not 750, it's somewhere in the middle there. So you just have to do some math, but it doesn't really matter because, you always want to get out of the calls early. It's tempting right now. A lot of returners are being tempted to buy calls for Friday. Absolutely do not do it. The more calls you buy, the more it's going to hold down, the price. If you want to buy some calls, buy some leaps. Otherwise, learn what people do on here, sell options. If you don't understand it, there's a lot of places you can learn it online. What else did I want to see? My notes are an absolute mess. So I want to talk briefly. I don't know if I should talk about articles or analysts first. They're both boring and pointless. But Just to make a note on what some of these analysts are up to, let's go back really right over here. I just want to, it's funny. This guy, Marty Struble, I think wrote this too. Don't jump the gun, says top analyst Kevin Barker about SoFi stock. And that's the exact same headline he used with Wedbush. Don't jump the gun, says Wedbush analyst Chia Pet. But anyway, there's the guy. You can see him on my tile. It's the lawnmower man because he's always trimming, and he's trimming for no reason. Basically, this deal, anybody who can walk and chew gum knows that this was an absolute genius deal. But what do? There's so many, like KBW, it wasn't even the parrot, Michael Perito, the bowling ball head. It was his colleague, former Dallas Cowboys head coach and Super Bowl champion Barry Switzer, who came out, with these notes, and he's like, listen, this deal is actually a pretty good deal. And not only that, it's going to be good for SoFi, but we're just going to reiterate our negative rating, or we're going to downgrade. And that's the strange thing is, why is the lawnmower man, Kevin Fudler, why is he trimming on the back of this deal? It doesn't make any sense. And if you listen to his comments, it doesn't make any sense. He said operating income is going to be slightly lower than my estimate for 2024. It's going to be 31 cents instead of 33 cents. But EPS in 2025 is going to be higher than my estimate from 50 cents to 55 cents or something like that. So he's like, I'm short term, I'm slightly bullish. More medium term, I'm much more, or short term, I'm slightly bearish. Much more medium term, longer term, I'm more bullish. So you would think that would result in an increase in his price target or his rating. Nope. He's trimming because he's a lawnmower man, because he's Kevin Fudley, because this guy always, sort of plays into the FUD. He leans into the FUD just as hard as he can. But it's neither here nor there. There's no point in reading the call because it's the same word salad that it always is. Weakening demand in the loans, but I'm encouraged by da-da-da-da-da. It's the same exact call. It doesn't matter if it's KBW, Piper Fudler. It's always the same call. So I don't want to dwell on that too much, but I'll just note, whether it's KBW or Piper Fudler, Kevin Fudker from Piper Fudler, I can't even say this nonsense, guys. Kevin Barker from Piper Sandler, he writes a relatively positive note, and then it's portrayed all over the media as a downgrade. Same exact thing happened with KBW with Barry Switzer. He wrote a lot of positive things. His note was probably 75% bullish. And then it's portrayed in the media as this big downgrade. So it is what it is. He's reiterating, a sell, reiterating a hold. But just trimming the price target, it's like he's chasing price actions. Like the stock is fairly valued at 750. So I'm going to trim my price target from 850 to 8 without any real mathematics or reasoning behind his models. Actual models for 2025 got better than his 2024 model got worse. So just doesn't really make any sense to me. But, obviously these analysts, some of them, their goal, I don't think this guy's like that. He's a good analyst, but sometimes their goal is basically to push on the stock. I think you see the FUD throughout, January, starting with KBW downgrading on January 2nd. Just didn't make any sense. Earnings was less than a month away. Most credible analysts rate stocks 3-4 times a year. They put study into it, and then you see how they rate the SoFi stock, like a chia pet or a bologna sandwich, a 5-head, even KBW. I think he's rated the stock 10 times in the last 12 months. When these guys were giving buy ratings, they weren't rating, every month. They weren't rating before earnings and after earnings and every time a note came out. Guys, everyone who knows what they're talking about saying this note is a great thing. And even the Chia Pet came out and adjusted his Q1 EPS from 1 cent to 2 cents. That's this quarter. Why did he raise it 1 cent? Because that equates to the $10 million maybe they're going to save on that interest expense. I don't know if that applies to Q1. If it doesn't, then he should upgrade for Q2 and through the full year. But the things just don't jive, guys. The rationale they're using in these downgrades, these FUD pieces, do not equate to their own projections. Something is rotten in Denmark, guys. Hello and welcome, hello and welcome. Yes, Superman, Super SoFi. I got my plaid on here today, guys. Hello and welcome and hello. That is SoFi plaid. Yes, indeed, Benji, you're a wise man. Hat to match. SoFi pissing me off, ready to make some money. We all are, Jazor. Mark Karras thinks you guys should buy SoFi. That is investment advice. If you can find him, you can sue him if you lose your money. No, I'm just kidding, guys. We're all free to give our opinions. It's just you just can't portray yourself as like a finance professional. It's not advice, guys. Idiots on YouTube. Don't go by it. It's dumb. We got checks ready for the dip in the house. Aunt Kathy, sheesh, saved me some. Yeah, I mean, she is buying the hell out of the stock. I don't know what she bought today. I haven't seen my ARC update, which I do get. No, I actually hate you guys, and do not like or subscribe. It's a complete waste of time. What's up, Birdie? Yes, I do hate you, but I still hope you guys make money. I want you to make money. I just personally hate you. It's not professionally. I'm willing to work with you. Personally, I hate you. So don't take it wrong. Don't take it like a bad thing. I don't know. Yeah, hockey rink's okay. I mean, he's an oval, so it's kind of the same shape I am. So can't get mad at him. I'm a creepy turd. Okay, Mopar, that's a little bit too descriptive. Who else has been writing? Covered calls. I started dipping a toe in the water, going actually the other way, but I don't want to go into like options mechanics. I'm just not the guy. I'm not good at it. I'm not qualified. I want to try to seek to tell other people when and what as far as options. Alberto seems to be quite proficient. Yeah, they're shorting at price target lower than 7, market pullback, capitalizing on momentum down. Yeah, that's true. I mean, I just think their timing is horrible, Dream of Stuff. I mean, they're just shorting the hell out of the thing into great strength. Look at their recent accomplishments, guys. You have net profit. That would normally be a big pop, and for any stock like this. You have the NBA deal. Then you have this bank core deal. Then you have the senior convertible note that's going to save them at least $40 million interest expense a year. It's a great deal, guys. Everyone who looks at it says it's a great deal. It might not cost SoFi much of anything. Might not cost us too much dilution. Will dilute us somewhat, but, that's kind of the price of growth. That's what I wanted to talk about a little bit with this, Gary Gordon article. I know probably Tanner will jump on it, but just Marty Struble, he always don't jump the gun. He just reuses that, copy and paste that same dumb headline. Guy looks like Marty McFly, but that's kind of an aside. Share price has been under pressure recently, so Piper Sandler's Kevin Fudker, 5-star analyst, rated top 3%. The guy's a good analyst. I mean, he's a very smart guy. He asks good, pointed, negative, Fud-like questions at every SoFi earnings call, so I definitely respect his skills. We continue to expect headwinds to develop in the lending segment as SoFi slows growth, coupled with higher NCOs, premium amortization, personal loan portfolio. These headwinds will be offset by significant growth within the financial services and technology segment, with management estimating 50% growth in 2024. We are encouraged to see a more diversified business model whereby one segment slows, the other can offset some impact. Does that sound like a downgrade? The headlines are so bad they create the FUD narrative. That's not even what he's saying. Half of these headlines is like, don't jump the gun. He's a hold on the stock. It's not even saying don't buy it. And he has upside on the stock even at $8. Lawnmower Man. Forrest Barker. Hold, Johnny. It's like, I don't want to get into the, Forrest Gump, AIDS baby bit, and Jenny. It's too easy. I think they already did that on like Family Guy, Simpson. Everybody did it. So he says that, which, he's talking about how resilient and diversified their business model is becoming. Barker's comments come in the aftermath of Western Financial Services Conference, SoFi, LaPointe, the aftermath. That was an absolutely great appearance. Listen to this. Following the conference, Barker came away particularly upbeat on the progress being made within the technology segment. As touched on above, it expects 50% growth. However, management offered a more conservative view regarding the lending segment. As such, Barker now lowered his operating EPS forecast fiscal year 2024 from 34 to 31 cents, so 3 cents. Higher amortization, he says why. On the other hand, driven by stronger growth in financial and tech pre-tax income compared to various estimates, fueled by continuous expansion in the tech segment, Barker raised his fiscal year 2025 EPS forecast from 50 cents to 57 cents. So long term, he's becoming more bullish, and he's downgrading. It just, I don't know, guys. It just sticks in my craw. It just gets me here. It gets me right here. On balance, Barker sees SoFi stock as fairly valued at current levels. So He reiterates his neutral rating, lowering the price target. He's chasing price action. This is just sick. Like on the back of a deal he really likes. He has, I mean, 850 the stock, but they don't go the other way. This reminds me, why hasn't the chipmunk from Oppenheimer come out and given his FUD downgrade 50 cents? I bet that's coming any day now, guys. They've been holding that guy in a cage somewhere, like Groundhog Day. He's gonna come up with his cheeks full of nuts, his rosy cheeks. He's gonna go, nope, 6 more weeks of winter. Don't jump the gun. Then old Marty McFly, Marty Struble. He's gonna write this. His name is actually Marty. That's kind of funny. He's going to write another, FUD piece where he gives like really positive quotes, but with this sort of scary headline. Don't jump the gun. Ugh. God. Does anybody else just hate this crap? Just these machinations of life, just dealing with this absolutely brain-dead media and having them influence dumb retarders. It's not great, guys. It's not great. Uncle Bruce is expecting a huge upward movement in SoFi stock price in the near future. He has a Wall Street background. Yeah, he does. I watched that video, that 19-minute video he did. It was one of the better videos I've ever seen, quite frankly. It explained this deal in plain English about as clearly as you could. And the reasons he gave for the upward price pressure is essentially going to be less shares. Basically, they're going to have people be able to... There's a spread they're going to make. There's caps on these things. This thing is a setup. The parties are going to make a ton of money. They're going to drive the price up. We say... When is the price going to go up? We've always said when institutions buy in. Guys, market makers have decided the price is going to be low. They've kept it low. Bigger market makers, more important market makers who have much more money to make. Big fish eat little fish. Big bank eat little bank. They're going to drive the price up. And there's these shorts, I think, just had horrible, horrible timing. I think they expected SoFi not to reach that net profit. I think they expect SoFi to fall apart in Q1. And I think the opposite's going to happen. I don't think they were counting on this NBA deal. Their website traffic, I think in February, was absolutely massive. NBA fans, they're young. They have disposable income. I think they're going to be great customers for SoFi, in my opinion. Guys, taking a look at, what the hell is this article? SoFi's near-term nightmare. Can the fintech darling weather the storm? This is Josh Enomoto. This is a pretty good article. It's 10 hours ago. I don't really have a huge problem with some of what he says in this article. I just think it's like super sensationalistic FUD. Near-term nightmare. I mean, even Gary Gordon, he's saying, charge-offs have soared. They've soared from like 2.9% a couple quarters ago to 3.4%. Gary Gordon's last piece was basically, and this is, for those of you who don't know, this is the guy, Tanner interviewed Gary J. Gordon. He's a retired financial analyst, very experienced math guy, very, very smart guy. He's a lot smarter than these articles he writes would indicate. SoFi deposit costs are high compared to traditional banks, and its operating expenses are higher than peers, raising questions about the value added of this business. The charge-off rate for SoFi's personal loans has been increasing, indicating a potential problem. I'll jump back to the other article, but I just want to make a quick point here. So, essentially, his last article... His argument was SoFi is not in a growth industry. SoFi is in a shrinking industry. He was saying consumer banking deposits are shrinking over the last couple of years. It's post-COVID, and which is true, but it's just a complete red herring, completely disingenuous argument. The fact is, this is a massive, massive industry. SoFi has a tiny fraction of 1% of it. SoFi can take market share organically from existing players for decades and decades to come and still not even put a big dent in the industry. So it just was a completely disingenuous argument that even though the overall market that they're in, just since COVID, might not have been growing, might have been shrinking very, very slightly, it doesn't necessarily mean that SoFi can't grow and grow very, very rapidly in that environment. Guys, the studio audience is getting rowdy. I think they've been drinking Chardonnay, perhaps. Very, very hard to tell. They're definitely a lovely audience. Very, very beautiful. That's just the kind of people we attract here on Un Poco Mas. As I've said many, many times, attractive people, intelligent people, they prefer Sofi. They prefer Un Poco Mas. 9 out of 10 dentists watch Un Poco Mas, and they take pills to get through it. Anyway, guys, Benji, how much of a lag does Ortex have? Isn't it like 2 days? No, the borrowing is pretty much accurate within like half an hour. Basically, though, they have been slipping because they're shorting somehow that Ortex is not accurately detecting. They usually pick it up on the dark pool by the next day, but they've been kind of blindsided by the official results lately, Benji. What's up, Flint Creek Soap Company? Hello and welcome, and hello, M. Russo. Wouldn't mind one last dip below 7. Blasphemy, M. Russo. No, I know. If you want to pick up more shares, of course, you don't mind it going down because you want those shares cheaper. Seems like weekly, months, we stay in Sofi. Yeah, I'm staying in it for years, Entertainment International, not weeks or months. Weeks and months is not a long investment time horizon to me, at all. Anyway, just depends. Some people's time horizon is like a 5-second, day trade. Some people's time horizon is, forever into retirement. Some people's time horizon is, we'll go ahead and do plugs here shortly. Some people's time horizon is many thanks, Princess J. Some people's time horizon is short. Some people's time horizon long. I have a very long-term time horizon. The reason I'm investing is, to provide for retirement, be able to do cool things, be able to do fun things. Just basically to have a standard of living later in life once I'm not working. My goal right now is not to make a quick buck. Now, if I can make a quick buck, if I can flip shares, if it becomes very, very obvious and it's slapping me in the face, I'm sure going to do that. I'm not going to sit here and not be active. I am going to sell options. I'm also sometimes buying options. I'm trying to make money any which way I can. But I'm also not looking for, weeks and months. I'm fine with the stock dipping. I'll definitely add more. I've been adding a lot of leaps here lately. It's like Entertainment International. You think it's a waste of time. I salivate when I see the growth. I salivate when I see the numbers. I think it's absolutely incredible. If you guys want to just, get yourself a semi, go to SoFi Shifts Gears. This is by Shareholders Unite. This is like yesterday. This guy's a serious bull. But if you want to be encouraged, just look at these 4 charts. Facts are stubborn things, and Gary Gordon goes over the 2023 numbers, but he says essentially EBITDA doesn't matter, it's fake. Adjusted net revenue, he probably says that's fake. Revenue itself, he says growth isn't good because it's a competitive industry. So, it's flipped on its head. It's a growth stock. You want to grow because they're actually making money, because Noto is balancing guns and butter perfectly. Most stocks growing at this rate are doing it at the expense of profit. They're burning money. SoFi is now making money. The balancing act that Noto has been able to pull off here, Noto and team, Noto and SoFi management, is absolutely incredible. Look at the annual adjusted EBITDA. This change is absolutely insane. 2019, losing 149, losing 45, making 30, making 143. And 2023, they're making 432 million in EBITDA with an EBITDA margin up to 21%. The growth rates, 38%, 63%, 52, 35. We're not slowing down into the teens, guys. It's not going to happen. Not with this NBA deal. And the other thing Gary Gordon completely ignores, it's not just the growth. He's like, SoFi doesn't enjoy operating efficiencies as big. He's comparing us to mega banks. He's ignoring the fact that SoFi is just starting to scale. Okay, you reach operating efficiency as you scale. SoFi still grew this last year at 34%. And I would theorize, I would posit, I would assert that SoFi is going to grow very, very close to 30% at the top line this year. I know they're not predicting that, but SoFi will continue to raise guidance every single quarter. They're severely sandbagged. That's why the Chia Pet had to raise his Q1 EPS. He's sick of looking so stupid. He's sick of his ratings being so wrong. I know that's his job, but he's sick of it. So essentially what this article does is completely they're like, you didn't look at numbers. So he takes this sort of red herring. He takes this one sentence that he should look at numbers. He goes through the 2023 financial statements. He's like, I'm not going to look out to 2026, but how do you value a growth stock without looking at the future, guys? This is what this article does. It's so dishonest. It's so lazy. How do you value a rapidly growing company without looking toward the future? It's just ridiculous. It's just futile. It's mental masturbation. It's cashing a paycheck. It's gross. It gives me the heebie-jeebies. Not the growth numbers that the company continually hypes, not the forecasted numbers out to 2026, which are anyone's guess. Like, it's not that management has been accurately giving guidance. They're not guessing. This is such a dishonest hit job. Not the non-GAAP numbers, which conveniently ignore inconvenient numbers, so some very actual ones scattered around the 229 pages of the annual report. And then he keeps criticizing that their annual report is too long. It's hard to follow. Money's money, guys. I mean, they made GAAP net profit. They're going to make GAAP net profit again this quarter. Even the most bearish analysts are saying so. So if Chia Pet is saying they're going to make 2 cents this quarter, say they just make 3 cents in future quarters. So that'd be 11 cents for the year. Say they make 2, 3, 4, and 5, guys. Do the math, 14 cents. I mean, SoFi is going to make like at least 20 cents EPS this year. Anthony Noto is all over this, and this guy is just, this guy is so lazy. I mean, he still doesn't talk about the tech growth. He's like, are they going to grow? I don't think so. And then he's saying, okay, if they are growing, growth is bad because they're paying for it. But then how are they making money? He's like, well, they're not really making money because they have all these uncategorized expenses. But that doesn't change the fact that they're making money at the bottom line. And when they start making free cash flows, massive free cash flows toward the end of this decade, this guy's going to be proven wrong. That's what I think. I think his real argument is that it's too early to tell. The fact that he wrote this last article and said strong sell, SoFi's a strong sell, because though they've been doing pretty well for the last 2 years, it's just too early to tell. I need 5 years history. Guys, you can't buy a company that's been public 2 years today after 5 years. Yeah, you can wait 3 years, but if he's wrong, the price probably will have tripled. And you can get in now. And you have to look at the downside. What's the downside risk? His downside risk of this stock is just absolutely nonsensical. So he goes in, he talks about SoFi's deposit cost being 4%, $11 billion. He's talking about Bank of America's less. Okay, but SoFi, if you look at the spread compared to Bank of America, data-driven investing did this. Bank of America's spread was like 2 and SoFi's was like 5. They make double the spread. So it's a completely dishonest argument. He talks about cherry-picking numbers. He's the one cherry-picking the numbers. But SoFi's extra funding cost may be offset by its lower operating costs, right? Because it doesn't have branches, right? Wrong. SoFi's direct operating expenses, page 112, which has track record as fee. My estimate is SoFi's average assets of $15 billion, higher than Webster Bank's 1.4%. I totally botched that sentence. Sorry, guys, talking way too fast. Note that my $15 billion asset estimate assumes SoFi's $12.7 billion of average deposits is backed by 15% capital, which it is. So $12.7 billion divided by 100% is 15. Not so far, not so good. But the FDIC, he's talking about FDIC guarantee. This is okay. So he's saying credit quality is not good. Personal loan SoFi charge-off rate 3.4% for 23. Why is that not good? I think it's lower than their competitors. He's saying it's higher, but the average personal loan yield is 13.3%. So if you're collecting much higher interest rates than Bank of America, yes, those loans are inherently going to be more risky and have lower charges. Bank of America loaning people money 5 and 6%, they're not going to have the same charge-offs as SoFi loaning people money at 13, 15%. It's just reality. The charge-off rose from 1%. Again, he goes back to COVID, and he doesn't even talk about it. 1% in 2021, 1.9% in 2022, to that 3.4%. Guys, there was so much free money. There was so much free money being printed in COVID. Everyone's able to make their bills. People were unemployed. They weren't buying their rent. They were getting massive checks all the time from the government. It just wasn't real life. And the fact that, defaults are coming back up to pre-COVID levels does not mean there's anything wrong with SoFi. Again, this is, I think, a completely sort of dishonest, lazy argument, in my opinion, guys. In my opinion, which is the un poco mas. Of course, that's why you guys tune in for my opinions. if you could charitably call them that, guys. Analysis, whatever you want to call it. How you doing, Joy Luna? How you doing, Emilio? How's it going, P Sizzle? Who cares about FUD? I mean, you got to fill the air with something, P Sizzle. They scared SoFi is going to take over B of A. I'm not sure about that. Average personal loans rose from 2 billion 2021. Average personal loans outstanding, excuse me, to 13 billion last year. Loans don't default on day one. Their loss rate grows as the season. And again, he's not telling you is SoFi aggressively writes down these loans as soon as they're delinquent. We've all seen that math. I mean, SoFi's on top of this. All the stuff he's saying, SoFi's on top of, SoFi's planning for, and SoFi's planning for worse than he's predicting. He's not even predicting. He's just taking the 2023 numbers. He's saying all these numbers are awful. SoFi's growth is bad. Their structure is bad. They don't enjoy operational efficiencies. I mean, do you expect a company with $2 billion in sales and an $8 billion market cap to have the same operational efficiencies as Bank of America, which is like a $300-400 billion market cap, and a company that's been around for 100 years or something? It's just not realistic. SoFi's only been a bank for a couple years. The company has only existed in its present iteration for 3-4 years. Anthony Noto's only been CEO for 5-6 years. It's not like this company's been around for decades and centuries where they're going to, be directly comparable to Bank of America. Is Bank of America growing the top line at 34% in 2023? That's a fair question if you're going to compare apples and oranges. You should sort of compare the positives and negatives. Both. He goes into credit card losses. We agree with that. Credit card charge-offs way too high, I think. And then he goes into the goodwill impingement on Technesis. What? Same business touts as a growth engine? What's going on? No explanation given. I mean, they paid more than the actual value on the books. They had to take a write-down. That's the explanation. I think he knows exactly what the explanation is. So then he goes into this sort of argument about how uncategorized expenses make things extremely hard to follow. And I think what's dishonest about this is that he's not acknowledging that the financial services side is brand new and it's not at scale yet. So they're going to be sort of positions, departments that are crossing over, and it makes it impossible to say they're with one side or another. Now, they could basically do this as a ratio. They choose to do it this way. If you look at the bottom line, I don't know why he has so much problem with this. I guess it's because they say there's a contribution profit, and he does an analysis that if you sort of do the accounting in a more conventional manner that most people he's seen. But again, I would argue this guy's probably his heyday was probably the late 70s, early 80s, judging by his hairstyle and his demeanor and his just overall curmudgeon attitude. Sort of the Larry David of a Seeking Alpha article. He's just a big curmudgeon, a social assassin. So all of the things he's saying are particularly negative. We don't know yet. His real article should be neutral. It's too early to tell on SoFi, and I think you talking heads on YouTube are a bunch of brash young idiots. And do they have sun in Canada? Why are you all so pale? Maybe you should ask those questions. Ask the hard-hitting questions. So he goes into this thing about how these aren't allocated, so be wary because there's not really a contribution profit in technology or finance, but they're still going in the right direction. SoFi talks a good game, but in addition to the supply-demand challenges I highlighted in my last article, a lot of current members, any forecast made by me, stuck in the middle. I'm personally wary of companies with lots of glowing hype about their expertise and future project. Walk the walk, don't talk the talk. I would argue SoFi, in fact, has been walking the walk quite successfully. This guy is distorting, being, I think, quite frankly, a bit dishonest here. I think he's smarter than this. And I think SoFi, you can't ask them to turn in results in quarters that haven't happened yet. You can't say just because they've only been public for so long, that's inherently makes them a bad company, a bad investment. Complex financial reporting that makes investors' ability to understand. If you listen to guys who understand financial statements, they don't seem to have any trouble understanding it. I think he's pretending to have trouble understanding it. I think that's what's going on. Rapid growth and competitive business, he discussed in his prior article. They're growing rapidly and they're doing better than their competition. And that he views as a negative. So how could I be wrong? And SoFi's current stock price proves cheap over the long run. I said long run because in the short term, anything could happen. It's only a penny away, but in the interim, it reached 916, up 19%. He could be wrong. Continued low unemployment. I don't think higher unemployment is going to really hurt SoFi as bad as he thinks. I think they're planning for a recession. I don't think one's necessarily going to happen, but I think Noto plans for the worst. A more benign competitive environment, consumer finance. SoFi is competing and winning. Noto said that over and over. They're taking organic market share, organic name recognition is growing. So the competitive environment is where SoFi thrives because they're taking existing customers. They don't have to create a new customer. They do a better job. People who come do direct deposits. SoFi is winning. They're earning the right to win. So a extremely competitive environment is good for SoFi because SoFi is better than their competitors. Facts over FUD. Strong profit growth in SoFi's technology business. I think their margins are going to be insane in that tech business. He completely ignores the fact that SoFi's proof of concept with a top 5 financial institution. He completely ignores the fact that that has been trending up, albeit slightly. But I mean, he's somewhat neutral here, so he's giving the counterpoint. That's a fair thing. Give him some credit there. This guy's very, very smart. He has decades of experience. He knows, he's forgotten more than I'll ever know about these matters. But some of these arguments, they just don't hold water, guys. They're obvious even to somebody like me who does not do this professionally, does not have experience. I just don't think you can say, hey, the company's new, therefore they're bad. It just doesn't hold water. You'd have missed all the good growth stocks. You'd have missed all these great investments. Just doesn't make any sense. I do hate you guys. Thank you, not a lurker. Some as yet unproven to me ability by management to extract extra profits. Just think about it, guys. Uncle Bruce was talking about this. SoFi, with just several thousand employees, handles like 1 million plus banking customers, millions of members. Their efficiency is very, very high. They don't have branches. I mean, just think about it logically. If you're able to give the customers the same service, make money from them, but you don't have all those real estate expenses, you don't have all those employees, you're not going to have better margins over the long run? Think about it. Just think about it. Use logic, guys. Facts over FUD. That's what I want to preach. Facts over FUD. Facts over FUD. Un poco mas has a pre-market content. Is that right? Now I have 40 million of tomorrow pre-market content. I'm not exactly following, guys. Sorry, I'm a little bit low on the uptake. I think that's a joke. I'm probably ignoring the very obvious right for the RC. That's right, my friend. Guys, thanks for tuning in. I don't really have too much else to say unless anybody's got something. That was a lot longer than I expected, 46 minutes. Trying to keep these to about 20-25 minutes. I think that's the time most people tend to watch for. But anyway, guys, I appreciate you joining me. Give you that last look at that live short interest that you all covet so well. So this hasn't updated yet, but this, so still sitting very, very flat here as it was yesterday, 11.54 million shares. Heavy short on the stock, going up and up into 3 really strong catalysts that should have sent the stock upward. Have the stock short volume ratios in the 70s, 4 out of the last 7 days, 60s a few days before that. Something's got to give, guys. This simply doesn't work. These forces, these institutions buying these shares, these senior notes, you have institutions like ARK who are looking for disruptors, showing very, very strong growth. All of these things come together. Sorry to be less just sparkling. Yeah, this sparkling water, Emilio, it's quite a luxury. SoFi hits 15 and get yourself a bottle of sparkling water. Anyway, guys, thank you so much for watching. That's really all I have for today. Also, just before we go, just look at the volume, guys. You see this just stair-stepping down. Shows the algos are locked on tight. 131, 83, 78, 69, 47. And today, lower shares. You had buys coming in. You saw variance in the volume and still heavy shorting. I mean, what are these guys shorting into? Was this their expectation this hot inflation number was going to crash the stock? I mean, what'd they get? 2%, 3%? So ARK could buy more. Vanguard could buy more. Noto can buy. I didn't see a buy by Noto, but anyway, guys, it's the SoFi stock. It's ticker symbol SOFI. This is Un Poco Mas for Danny Deals, Princess J Cutes, Not a Lurker J Money. We appreciate you tuning in, and we'll see you next time, guys. Peace. I'm out.